Stock Talk. This is your host, Scott. Hope you had a good New Year's. We are starting our new year tomorrow as far as our trading goes. Did want to kind of do a recap tonight on, how we did this year and some of the top five and some of the bottom fives and things like that. Also going to touch base on those ETFs that we bought when the market first went down. As it was going down, we didn't get the bottom on it, but I want to show you how that would have done if you would have got the bottom on it. We made pretty good money on it pretty quick, so we got out of it a long time ago. But we're going to look at that tonight and see how those finished up. I think you'll be a little bit surprised, and it will kind of give us an idea for next year on how we want to approach some things. So let's go ahead and jump over and take a look at what we did for the year. So let's just kind of talk about that. We had a really good year. I'm not going to give any specifics as far as numbers, as far as that kind of thing, but we beat, of course, cash. We beat savings accounts, CDs, and we beat all the S&P. We beat the Dow, and we beat the NASDAQ. So you can go check those out and see how they did, and you can give you an idea. We did end up with a good bit of cash on the sideline to start the new year, and that's just where we want to be, 74.42% on the sideline right now. So do want to give you an idea, though. We make a lot of trades during the year, and we churn through that portfolio as far as the cash levels go, and we trade a lot. So we did trade a lot this year, and if you've been watching the videos, most everything we sell is usually for a profit. So it was a good year, and able to do that trading a lot because the market just kept going up. So from the bottoms, but it takes a little nerve to jump in there when the thing's going down. And of course, like if you watched the videos this year, it was nerve-wracking back in March, but we were buying all the way down. I mean, way too early in a lot of cases. I wish we'd held out a little bit longer. Still something I've got to work on, and that's a goal, is try to be a little bit more patient. And so we're going to try to do that this year. But we did good on the pocketing of money that we talk about. That's where I buy something and I sell something. Each time we made a trade, we did average 4.74% on the actual trades. Now, portfolio was up much higher than that, and that's my goal on my portfolio every year is 6%. As well as, I like to make 6% on every trade, so because that way you don't have to worry about that portfolio. But when you trade as much as we did, you don't have to trade. I mean, you don't have to make 6% every time on a trade. So that's why we ended up in such a good position. But of the trades we made, bought and sold, there was a 4.74% on the actual pocketing the money. But you got to remember, we turn around and we put that money right back to work in a lot of cases. And so we're doing that over and over and over and over. And so the gain that you end up with is much higher than the 4.74%. So anyway, again, a good year. Let's talk about some of the top stocks that we had. Top stocks that we had, and all of you probably can guess the number one was Novavax. Novavax on top of the list, probably looks like about four times as far as the money value goes that the other stocks return. We'll talk about that some too, just how that did break down. But Novavax number one in both portfolios. I'm not really going to talk about the cash count because it's not that much money over there, and I don't trade it as much. But as far as the IRAs, Novavax number one stock for the year, both IRAs. Second stock in both IRAs for the year was U.S. Steel. And U.S. Steel is something that I had bought originally. And just to give you an idea of the power of cost averaging, the first lot of shares that I bought of U.S. Steel was $29. Okay, so the first lot I bought was $29. Now, you know that we didn't sell out at $29. It never got that high. I think the high was 20 something this year, 21 maybe, 20. But because of cost averaging, you lower that, you lower your share price. And so 29 is a way too high a price to get in on that one. But we did cost average it, and we ended up being the second best one in the portfolio for the year. And we had that one a little while too. I mean, that was probably one of our longer holdings, along with Novavax. Some of the Novavax we had held for almost a year. All right, so third in one portfolio was MPC. Had a pretty good year with that one. In one portfolio, we didn't trade it in the other. Not really sure why. I can't remember why I didn't trade it in both, but NKLA, believe it or not, was number three in the second portfolio. So NKLA, of course, we're holding that one now. We're holding it. It's at a loss right now. Everything we're holding is in the red, and that's not a bad way to end the year. You've gotten rid of all your winners, and you cashed in on them. So that's nothing wrong with that. Number four, NKLA in one portfolio, and the other portfolio is LUV. Okay, LUV, that's Southwest Airlines. Remember, we bought the airlines when the market dipped real bad back in March as well. So last but not least, in one portfolio it was EXAS, and in the second portfolio, DAL, which is Delta Airlines. Actually, is the one that kind of edged that one out. So that's where we ended up with the top five in both portfolios. Did want to tell you a little bit about the lots on Novavax. To kind of give you an idea, I had bought Novavax 118 lots. Okay, so that's 18 buys that I've gone and bought Novavax, 118 lots at different times, at different share prices. Now, when I sold those, we did sell at a loss sometimes. Some of those lots were at a loss, but the overall sale would have probably been in the green. But we did end up, 41 of those lots were red, okay? But yet that's our top portfolio performer. Again, it all comes down to that cost averaging. Again, the cost averaging, if you're not sure what that is, I do have a video on that, and you may want to check that out. Cost averaging is something I do all the time, and all it is really is you're buying your first share, first lot of shares on something, and you realize that's not the bottom, and it goes down another 5%. Well, I heard something or read something one time that says, if you buy a stock at a certain price and it goes down 5%, then that means you've got a 5% sale on your stock. Why wouldn't you repurchase it? So there's issues with that, though. You can run into falling knives and things like that. That's why, I like to cost average, but I'm only going to cost average in things I've got a little bit of confidence in, or things that I'm okay waiting a while if I have to. But you can get caught into a stock that just continues to fall, and sometimes you get stuck in one, and then you'll never recover from it. So be careful, but cost averaging is a good thing. Okay, so let's talk about Novavax. I did make some notes here. Over the overall winnings, Novavax was 1/3 of it, 30%. Okay, so for the year, Novavax covered the 30% of my winnings. U.S. Steel was 10%, 10.6. So all other stocks were, were something else. So 40% from two stocks. So that's how a year can go. Is there's two stocks to pull your portfolio halfway up. So almost. All right. So in the one of the portfolios, we had 25 winners. The other portfolio, we ended up with 23 winners, and we had 4 losers in one portfolio and 5 losers in another one. So it's not always, you're not always going to win, but You just want to make sure you win more than you lose, and your wins are bigger than your losses. So we did that. Biggest loser this year was Chesapeake, CHK, Chesapeake. And it was over 75% of our losses was attributed to that one stock. Okay, Chesapeake. Other losers that we had were ACB, EEM. That's emerging markets. HTBX, another one of those COVID stocks, and FXI, which is another ETF, China ETF. But those were our other losers. But the biggest loser, Chesapeake, was 75% of our losses. So that won. Okay. Again, we are holding losers now in our portfolios. And you've seen those losers that we're holding, and I've got a couple other ones that are not in that portfolio that we have. So, all right, so let's see here. And those losses range from that we're holding. They range from anywhere from a 7% loss all the way up to a 76% loss. So that's how big you can get in, big you can get down on some of these. And it just goes to show you that I hold things, a lot of times I'll hold them till they go under. And that's just because I'm stubborn. I don't like to sell because it would have been a mistake so many times. You can get down 50% on something and it turn around and make money for you. So be careful, having a point where you're going to sell. I mean, if you're not in a hurry and you diversify, you can wait these things out a lot of times. And very seldom do they go out of business, but you've seen some of it this year where we've had reverse splits and things like that. That's what gets you. And, those kind of things are hard to recoup from unless you start cost averaging, which I don't advise on those kind of things. It's gone through a reverse split. That's usually, coming to an end. So, all right. So, but I did a little calculation and I looked at those losses and I said, I thought to myself, what would happen if it ended up even on every one of those stocks, okay, before, the end of next year. If we just ended up even on them, okay, we would have almost a 20% gain for the year, 19.46. So that's something to look forward to, and hopefully some of those will turn, and I have no doubts that some of them will. So. And it doesn't take but one or two really to turn, and next thing you know, you kind of covered all of them. Those have been since funded. The way I'm looking at it, even though we had all those losses, they're down that far. We had a year that covered more than that. So I'm not going to sweat those that are sitting there in the red. Just kind of put them out of my mind. I keep an eye on them. Maybe cost average a few of them, but we're not going to worry about it. But so that's kind of where we ended up for the year. Again, a good year. I hope you got to watch the videos during the year. And one of the things we did, if you'll remember back when the virus struck and it was terrible in March, we did buy some ETFs, 4 ETFs that we talked about, and got videos on that as well. So go back and check those videos out if you hadn't seen it. But we bought them on the way down, and we actually traded them, I think, a couple of times and made money on them. So, but let me just show you. I want to go over here and show you what those look like now. As you can see here, DIA, which represents pretty close to the Dow. The low was 182. It is now 306, and that would have been a 67 or 68% gain if you just bought on the low and just put your money in that ETF there. You would have had a 67% gain, and you would have outdone me for the year. So, and most other folks. SPY, if you caught it on the low, a 71% gain. SPY is ETF for the S&P. BTI is kind of like an overall market ETF, the way I look at that, and it's 77%. And look at the QQQ. The QQQ ended up 90%. So if you want, that would have been the easy way to do it. But you never know how that's going to go, and you very seldom can pick the bottom, if ever. I can't, never have been able to. Did buy every one of these more than once, I think it was. So we did okay on them, but we didn't do that. So, but that just goes to show you, and that's why I've got this cash on the sideline, because if these markets do pull back, let's say we got a 20% drop, you can believe I'm going to be buying those four right there. I'll be putting some money in every one of them. So that's a strategy I'm going to have for this year as well. We'll be watching that real close. Hopefully, I'm not in the market a whole lot when that dip comes, and it could be a good one. This market has been going crazy. It's gone straight up the last year or so, so it's got to it's got to pull back at some point, and I don't know when that's going to be, but I got a feeling it's got to be coming. It's got to be coming. So not real confident in anything. Not sure about buying a whole lot right now. It's going to be specific stocks for sure. Some that have been pulled back already. But let me tell you, when that market hits and it pulls back, it'll pull back everything. So even if you got one that's pulled back already. So when it pulls back, it has a tendency to take everything with it. So even if you're buying individual stocks, you can still get caught pretty bad there. So this year it's going to be more of the same. We're just going to be looking for good deals. Uh, as early as tomorrow, we'll be looking at Novavax. It's very close to where I want to buy it, at least the first lot. We'll probably buy some around 110.50. I think it's 111.50 now. We could go ahead and take a look at our portfolio real quick while we're. All right, so here's our portfolio from Friday, and Friday was red across the board. And here's Novavax. Again, we were very close to getting in on that one. We had some orders out there at 110.50, and we didn't ever make it, but it was very close. But anyway, that's where we looked. That's where we left everything. 111.51. Everything else red for the day. But this is one we're going to be kind of focusing on tomorrow. Is this one here? 110.50. We'll probably start buying. Okay. All right. So that's for tomorrow, and of course the rest of the week we'll just be looking for any other thing that we can purchase. Might drop on us, and might can add to. But I'm not going to be in a hurry. I'm waiting until this election stuff's over with. Just kind of, I'm expecting some kind of pullback here eventually, but sure hasn't happened yet, and not sure when it's going to happen. But I got a good feeling it's going to happen, and I just don't want to be too heavy in the market when it does. But we're going to try to hang out around this, 60%, 70% cash level for a little while anyway. Probably through January, just to kind of get an idea of, you know, how all the election stuff plays out, and just once Biden gets in there, if he gets in there, then just see how the market reacts to that as well. So, all right. So I hope you have a good week of trading. We're gonna try to check back in with you later on in the week, maybe Wednesday or Thursday. But have a great week, and we'll talk to you then. Hey, if you haven't subscribed, please don't forget to do that by clicking this button right over here. Also, don't forget to smash the like button and leave a comment if you like, and just tell me how you did for the year. That'd be awesome. We'll talk to you later, and have a great night. Thanks. Bye.